So traders, right now, gold and silver are setting up the way that I've been talking about for the last couple of weeks. And that is, I believe there is one more push to the upside, and we're starting to build a lot of pressure, a bit of volume coming back in to gold and also silver and also the mining sector right now. So I want to walk you through that right now. Also, I want to walk you through why I believe TLT and TMF could be potentially a good buying opportunity coming up real soon for the next bull market. I'll walk you through that. Also, I'm going to be walking you through the actual stock market itself, and there's a lot of interesting pattern that's forming on there right now, and most people are not seeing this right now, and I believe it's going to sort of turn some people's heads, so to speak. So that's what I want to cover with you right now, traders. Make sure I'm giving away free access to my complete trading course in there right now. The first thing in the description, free access to my complete trading course. The biggest mistakes you're making right now, the number one chart reading technique that's been working since the 1950s. I'll walk you through that as well too. My trading system. I'm going to walk you through the energy phases of the markets, the energy building and energy using phase in that trading system, and so much more in that there as well too. So first thing in the description there, guys, make sure you go grab access to that. I promise you, once you've completed the trading course, I promise you, you'll start to understand the markets more than 95% of traders out there know and understand these markets. And it's free. So first link in the description there, guys, you can go get access to that. The one thing that I want to sort of walk you through within these markets here, and one thing that my videos have been talking about, how I see a big crash coming in with gold, right? So I see a big crash coming in gold. The interesting thing, the big thing I really want to walk you through is that in those videos I've been mentioning how I see one more move in gold coming, in silver, and also the mining sector. But we're getting towards the end of this big bull market here, right? We're not ready for another doubling in gold, right? The GLD right now is sitting at $315. I do not believe that we're getting ready for a $600 GLD, right? I believe there's going to be one more push to the upside, and I believe this is the end of this push before we start to see some catering across all markets, right? Across all markets from there. And one of the really big things is I've been noticing here. Let me show you this here. I want to show you the yield curve here because I think it's really important to understand about what is happening here on the yield curve. And the reason why I'm bringing this up here to you is because I really want you to be thinking about like what's coming soon. And in recessions, what typically happens, and this is the yield, this is the gurufocus.com website / yield curve. You can see the URL up there. This is the website that I got here. And one of the big things I want to, let me see if I can make sure I just get this right for you for there. So look at this here. So we do know, if I zoom right in here, let me zoom right in here now. So there we go, right? So firstly, we can see the 10 to 1 year, the spread, right, is getting, let's keep it simple here, right? When we're below the red line, it's a trigger for a recession coming, okay? Once we actually get back above the red line, then we can see what happens typically in the last, since the 1970s, right? What is that? When we get below the red line and we get back above the red line, right? That simply says what? We're now heading towards a recession. We're going to get one of these gray bars soon, right? Gray bar, gray bar, gray bar, all right? Now, recession might sound like a bad word. Ooh, recession. I want you to be thinking about the markets as a whole when looking at the markets as in like, there's both sides of the coin here, right? So there's going to be shorting opportunities coming in the markets. But also, just understand too that recession sounds like a bad word, right? It's like, oh, there's a recession. We're probably already in one right now, right? But you do know that 90% of people still, even if we get a really high unemployment, 10% unemployed, that means 90% are still really active in the markets, right? Or still really active in their life, and they're buying things and they're doing things, right? So the whole world doesn't come to a complete stop. That's not until 2030. And then you got to, right? And also look at this here. The historical treasury yield spread, the 10 to 2 year, is also doing the same thing. Now you can just see once again, right, that if we're talking about recessions, and there's indicators we can look at to see whether we're headed towards a recession or not, right, is this, right? When we're below, when we get back above, gray line simply means recession. Below, above, below, above, below, above, below, we're now above, right? So we do know we're very, very, very close to getting into that tipping point for the next recession there. Make sense? So we do know that. Now, what typically happens, and I want you to understand, is that what we can utilize is we want to utilize history to give us a guide on how things are going to play out here. And if we go through, say, for example, the Great Financial Crisis, right? Because that was the last big bang. Now, by the way, we really haven't had a real big recessionary period, right? For a while now, since 2008. What is that? 16 years, whatever. But if we go back to that period here, this is what actually, a lot of people have been, I saw some videos just recently about people seeing, like if we look at the massive longer term charts, right? So we go to here, this is the massive long-term monthly charts, and they say from the low down the bottom here to the top up here, you know, that was the big move. That was the overall move there, right? And yes, I actually see in gold, something similar like this move happening. And I mean something similar like this move happening. Now, what actually happened when we look at this low period to high period through here? What actually happened? We ran up, then we actually had a big drop to the downside, didn't we? And then we had this move here. So I actually see this was the 08 period here. So I rally into the 08 crash. Gold actually dropped in the 08 crash. And then the aftermath right there was then we had another really big inflation. I'm actually expecting the same type of thing happening. Meaning, if we look at these from different phases in the markets, right? So we have phase 1, phase 2, phase 3. Phase 1 is the boom before 08. Phase 1, check. Phase 2 is the dropping period through here. We may get a rally to the upside, but then which I'm expecting, but then that's going to be one last push before we see some movements on the downside. Phase number 2, check. And then phase number 3 is what I see happening later next year, right? Which is going to be same thing. Now, again, look at what gold actually did in the recessionary period, right? So look at this here. Now, remember I said before, if you watched yesterday's video, I talked about how the markets, whenever we go through these moves, we tend to revert back to the mean. That's what Howard Marks, right? He talks about reverting back to the mean. Look at this here. From high to low, we end up dropping 30%, right? 30% there. And just had a move up. So we had a spike before the recession. Then we actually came down with gold. And that's what I'm expecting now to come with gold. So yes, while I've seen some videos that says, but you can see the low was here and the high was here. Yes, you're right. But it went up and then it dropped 30% and then we went back up again, right? And so therefore I'm expecting to see it. And especially this one here is actually much vertical than what we've seen in the past. So there's going to be a cracker of a moment in gold, which is going to send some shockwaves through the gold, which is going to send gold down. Initially though, again, back to this chart, we're getting ready for that last push to the upside, and we're starting to build that pressure there, right? And we can see here that looking at this level from, let's actually go to, if I zoom right in, we're starting to build a bit of pressure here right now. A little bit of an extra volume spikes coming in as well too. So we're starting to get that right now, okay? So looking at that from there, we can actually see that, and then we're likely to pop, right? And once we do pop, we're probably likely to see gold take on some serious price action, right? So I've got a target of potentially 370, potentially, of that next move coming up to the upside. I may be wrong. It may be a lot shorter than that. Maybe. So that's what I'm seeing there from when it comes down to, if I bring up this chart now, we can see that that's what's going on there. So that's what I see overall on a overall basis on what's happening there with gold chart. If we have a look at silver, actually if I bring up the SLV price, this is the SLV price. Once again, the trend is your friend until the end. The trend has continued to be strong, very, very strong here. And so therefore, I believe just like gold, silver's getting ready to break up to another new high for the last few years. And by the long-term charts, that's what the resistance was from there, as you can see. And so therefore, we should make our way back up to around that $40 level, potentially, maybe even a bit higher than that, but around that $40 level. So we should start to see silver now. As you can see, we've been going through what's called a time phase, an energy building phase, as you can see, sideways here. So we should start to see now silver actually start to pop. And once we pop, we're probably likely to go for a really nice move back up to the upside around 15%. But then we're getting towards the end of this move, right? Again, this is the end of the move. This is not the start of a big... I saw someone recently come on, and again, guys, this is just my opinion, right? This is just what I think. One thing that I was actually... It's interesting, guys, like... One of the things that the reason why I'm doing well in my own trading, and I was talking about this with my Inner Circle member group and what's called my 1% Club group. If you'd like to learn more information about that, see people who have actually done my coaching in the past, maybe even learn more about me personally, if you click on that second link in the description, that's actually an application form to my coaching program, where you're actually with me for an hour or sometimes even sometimes even up to 2 hours per day, going through the markets and talking about this sort of stuff, right? So go over there, you'll be able to see there. If you think I'm full of shit and have no idea what I'm talking about, you'll be able to see people who have actually done my coaching in the past and the results that they've gotten. I'm not saying you're going to get the results, by the way, that they actually worked hard. But if you'd like to learn more about me personally, about like who am I actually personally, what's my background and what's my story, if you click on that second link in the description, you'll be able to see the application form, people have actually done my coaching, and then down the bottom of the page, I've got an article there that I put together, and it's actually basically my story. I wrote my story out, showing you how I got started into the stock market, how I got started in trading, and my downfalls and setbacks, and what's led to me right now, and what are my goals right now with my own personal trading. So if you want to learn all that, guys, there's that second link in the description. But I was with them today, like I am every day when these markets are open. And one of the things I love about that group is we're together all the time. And it's and as you know, trading can be a lonely thing, right? So we learn powerful trading setups, and we're in an amazing group. It's only about 15 people in that group right now. So it's a real small group. So just so you know that, I keep it really small. So one of the things is, I was talking to them about that trading is all about just the repetitive patterns that tend to repeat in the markets, right? They tend to repeat and repeat and repeat and repeat in the markets. So one of the things that I see repeating time and time again is that what's called the energy phases. And the energy phases is that whenever we get this, what's called an L-shaped pattern, where the market goes up and we get this sideways phase, we typically have another nice move in that direction. Now we're doing this, we're sort of slightly, but we're doing this sort of what's called an energy building phase overall here, right? It hasn't been going up, hasn't been going down, just slowly been going sideways. That's really powerful for a breakout coming soon, and we should start to see a move up towards that 41 level, maybe it higher, maybe it lower, right? But we can see that through there of what's going on there, and this is the powerful patterns that I love trading because it's whenever we do get that overall sideways movement, we then tend to get the breakouts and so on and so forth, right? And we even saw this with gold as well too. My chart's not going to do it for me. No. Right? And this has been a massive representation, obviously, even from the weekly chart perspective. Right? If you look at this here, right? Up and then sideways, up, sideways, up, sideways, up, sideways, and then up again, right? It just goes through those cycles there. But whenever we do get that pattern forming in the market, it's really, 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 really powerful in the markets from there. The GDX continuing again, but we're getting towards the end of the leg, guys. This is not the start of a very big bull market. We've already gone from 40 now up to almost 60. Actually, we've gone from 30 to 60, right? So it's actually basically doubled there on the GDX. GDXJ again is continuing to break out from here. We may have a little bit more upside to come. Again, just maybe one more push out of these markets, guys. Same for the SIL as well too. SIL short-term resistance is around that $60 level. So even though we may continue seeing a more push to the upside, we're probably likely to be running out of steam real soon as well too. And the SIL market as well too. So the overall thesis of what I'm seeing is that one more push coming in metals and miners, and that's it. It's game over. One more push and game over for these markets. Expect a really significant drop in these markets after that. Now, this is for trading purposes, right? For you guys that are long-term buy and hold of, say, for example, gold, this is not you, or let's get out now and then let's get back in. And like, don't do that, right? Don't do that. I eventually see in the next 5 or so years, or maybe even in early 2030s, I see gold being at $10,000. Again, I could be wrong, right? That's just the guess. I'm using it from a round number and I'm using it from historical basis. But I do see gold doing that. But firstly, we're going to get a shock first, a little bit of shake and bake to shake people's hands out first. The next thing I want to talk to you guys about is the TLT market. And this market here, I've covered this in the basis here, but if we can get like a bit of a capitulation type of move coming soon out of the TLT market, bit of a capitulation, then I do see this thing coming down through to here. What typically happens if we can get this pattern here, I'll show you this here. Typically when we have a major support level and the market breaks down, but then reverses right back up again, right? So it's a breakdown, it's a false breakdown, and then turns back up. If we get something like this here, there's a massive probability we're about to see something like that over the next 1 to 2 years. Let me show you some examples of what I'm talking about here. So this is, once again, this is sort of stuff that I've been talking about with my group there, guys. Again, if you're interested in joining that, where you're with me every day and you can be around like-minded people and I can really help you with this sort of stuff, then just make sure you go apply for that. That's that second link in the description there. Now, look at this here. So this is an example here, right? Bit of data missing here, but look at the concept here. All right, I want you to understand the concept of that. We had a major support level all through there. Right, we can see that, right? We had a major support level here, right? But look what happened. Support, look at support, boom, 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 boom. Then we actually broke down, didn't we? See how we broke down? It flushed down, didn't it? Now, that's step number 1. I want to see that with TLT. Step number 2 is I want to see it do nothing for a bit. Step number 3 is I want to see it get back up above like that. Because if we can, then we're now likely to see that's likely to be our bottom in the markets before we see more upside to come. One screenshot that I don't have in here, but I definitely do remember this happening on silver as well too. Look at silver, right? This happens on major bottoming patterns here. I remember this happening in the COVID days actually with silver. Right, look at this back here. Right, and let me just, I'll make this really thick so you can get a, look at this here. So what actually happened back here? Notice how what? Notice how we had a big flush down. See that through there? So if I zoom right in now a bit more for you, look at this here. Right, notice how we had the support level back here, support. We had a big flush down, didn't we? Now that's a break plus major support. There's two, think about this from a psychology perspective. What that simply means is that if this is a true breakdown, then now what was support is likely to become resistance, right? But sometimes you don't. Sometimes you get the flush down, followed by the complete reversal coming straight back up again. If we get that, then guess what this is? This is now a fake out, a false flush down, and typically the start of a really good move out of the markets, as you can see from there. Just that silver pattern just appeared in my mind as I've been doing this video for you. I didn't plan it. But that's that one there. Here's another example here, right? Major support, and as you can see, there's these patterns in the markets. And I'm not that smart to say, well, if inflation and Israel and the dollar is doing this, then this can't happen. Like, I'm not that smart, and neither are you, right? You're not that smart. But one thing I do know, is that there are repetitive patterns in the markets, right? And when these repetitive patterns form, there's a high probability of what's called the cause and effect relationship. The cause, this pattern here. The effect is generally whenever we get that's a major bottoming pattern, and it may take a while, but typically we start to see some nice up moves. What about, say, for example, Facebook, right? Or Meta. What am I looking at here? Right? Same type of thing, right? There's resistance, all the support. Look at this here. We broke down. We came down. We came straight back up again. Again, this is a weekly chart of Meta. See how that happened through there? Look, what was that? That was now the bottom in Meta before we started to see the move to the upside. So, as you can see, like, I'm not that smart. One thing I do know is that the market gives us, there's these repetitive patterns that form again and again and again. And you get these short-term flushes of major support levels, right? And short-term, if we get it again, because if this was a true breakdown, you would expect now TOT to make its way down to 60, 65, right? So, and that may happen, right? That may happen. But let's let the market do the talking. And what is that? That is if the market flushes down here, but does exactly like I showed you examples here. If it does go there and we start to get a move back up through there, this typically now becomes a bottoming, and then we go up, and then we go up for a few. Now again, this is a weekly chart where we go up for a few weeks, and then we might back off for a month, for a few weeks to a month, and then go back up again, and stuff like that, right? We start to go through this cycling of potentially this being a bottoming in TOT, right? Same for the stock UNH. If you look at UNH, what did UNH do? Let's go to, actually, I'll go to the daily charts here for this one. But look what UNH did. Just perfect, right? Perfect. Came down. There was the support level. Look at this here. Flushed right below it. And then see how it came below it. Just below it. And then turned right back around. So there's a high probability that now we've found a major bottoming pattern. A bottoming pattern in UNH before we start to make at least a move back up towards this, what's called midpoint, right? Mid-range. Which is just another term for 50% retracement. That's all. It's called equilibrium, because whenever the market gets too far stretched on the downside, we're likely to get bounced back towards a equilibrium, which is a 50% retracement. If the market moves too far up on the upside, right? Say for example, stock market, right? If we move too far up on the upside, and let's go weekly charts. I'll go to the S&P because this is a much more better example, right? When we have too much of a move to the upside, we end up getting a move back down towards the equilibrium. Another big movement up, move back down, equilibrium. As you can see, this is that's all markets do this, right? Even gold did this. So, and that's where the stock market's probably on its last legs to the upside. We're getting another push to the upside here. Don't fight the market. Don't be looking to short the markets. Don't be doing that sort of stuff, right? Go with the market. Actually, right now, the one thing I'm doing with the indices anyway on the stock market is I'm not involved with this at all. I'm not shorting. I'm not going long. I'm not going long. Why? Because who knows when this blow-off move is going to end. I'm not going short right now because who knows when this thing's going to end, right? Be smart about your trading. Step back and look at these other markets. There's so many other markets. Like I'm in 2 trades right now, and they're amazing, beautiful trades. Some of you guys can probably guess what they are. Right? So that's what I'm seeing through there, guys. There's a whole big move happening right now. So overall, stock market's giving us one more push. I see metals and miners. I see all this. One more push to the upside in the next couple of weeks out of these markets from here, from the stock market perspective, from gold and silver. And then from a trading perspective, if I'm in any of these, I need to be out in the next couple of weeks because then we're going to start to see some really big catering. And there's going to be a revert back to the mean. Remember I showed you before? Right, when you looked at these big long-term charts, eventually we get a revert back to the mean. And that is what? Simply up, down, 50% retracement. Up, down, 50% retracement. Up, we may go up through here. We're likely to get it down. 38, 50% retracement. And so that's what you don't want to be fighting from there, right? So just see this market here. We're likely to get that and be excited for that, right? Because as I said before, one of the things I'm really excited about, if I'm looking at my next 5 years of my personal trading, is if I go to the GLD, one thing I'm really excited about with the GLD price here, and I'll just bring on the logarithmic chart because the logarithmic chart makes it much easier. Oh, by the way, one thing I was doing here with the logarithmic chart, just to see how far we could potentially go, this is how I got the target. Look at this here, from low to high there, that's the low to high there, right? And if I look at the last big moves here, and I extend that up, now you can see how I got that target up there with gold, right? And I go back to the daily charts, now you can see the reason why I have this target up here with gold. Make sense? So that's how I got the target with gold. Now if I go back to the weekly charts and even the monthly charts, these are the monthly charts, you can see what's happening through there. That's the target with gold. But one thing, if you notice what I'm seeing here with gold overall is this. What am I expecting? I'm expecting another move to the upside from there to there. And by the way, that low, that high, that low, that high, these big moves, that's pretty much exactly the same length from there, right? Then what am I expecting? I'm expecting a drop, right? I'm expecting a drop, I'm expecting a drop, I'm expecting some sort of a drop coming soon. So it's either going to be fast down like that, or it's going to be just slow down for a couple of years, and then we're likely to pick back up, and then we're likely to see some really big moves to the upside. But as in for the bull legs, before we get the corrections, this last push that's likely to happen is likely to be the last one before we start to see some really big shaking the weekends out in all markets, right? Probably cryptos, probably silver, gold, mining sector, because they've all done big moves. All these markets are now getting very frothy, and even the stock market.